there are really two markets still going on. You have the technology that's gone crazy with so many stocks making new all-time highs within the tech sector, within the healthcare sector, within the cybersecurity sector. But then when you look at the retail stocks, many of them, and if you look at the transportation stocks and a lot of the manufacturing industrial stocks within the small cap index, they're hanging tough, but they are so grossly underperforming. And that's where the concern comes from, because people are saying, well, looking at these sectors, where are we going to see growth in the economy? We kind of have gotten over the back to normal trade, particularly, as you just said, with concerns about what's going to happen with the variant, especially as the weather cools. So today, Wednesday, first day of September, what happened was the market opened up a little frightening in that Nasdaq was firm, the S&P 500 was firm once again, but the Russell 2000 and the transportation sectors in particular were red, and since they've gone green. So the question is why? Well, we did have a jobless claim today that showed less job growth than what was anticipated by a lot. It really fell from expectations greatly. And what does that spell to investors? Accommodation, because the Fed has clearly said that they're going to be watching the labor force, and if the labor force does not grow, they're going to continue to keep everything very dovish in terms of not tapering and keeping interest rates low. And hence you've got now those areas of the market trying to hang in. So it's simple. In order for September to continue to be an amazing month, and really to the disbelief of all the naysayers based on cliches, which I hate, you'll really have to watch those sectors. And if they continue to roll, and if they continue to get further away from their key moving averages, then we're going to have an amazing month. And if they fall apart, then all of this lofty overvaluations that we're seeing in some of these tech stocks, gravity will take over. And it's really that simple. So you've got to be careful, but play, because right now the opportunity seems to be amazing that a lot of these value stocks have gotten so cheap. You know your risk. Well, yes, there's a couple of stocks that we have watched and we've put on some positions on. Some of them actually are tech stocks, but they haven't followed in kind with Microsoft and Google and Apple. That would be like Palantir as one stock. And the other would be Teladoc, which actually does take a little bit advantage of the fact that people are going to be staying home over the next few months, unless they can prove they have a vaccine. And in many cases, they're just staying home because their offices are no longer asking them to come in every day. And also some of the old-fashioned stocks that haven't moved much, like IBM, for example. IBM has been on a back burner because the supercomputers that the government wanted to use them for aren't ready, so they've turned to NVIDIA. But I still think that IBM has a tremendous potential from this level. And of course, what I always like to tell people is, regardless, if we're going into a market that's going higher because of more Fed accommodation, or at least not accommodation going away, you got to watch those commodities. So steel corrected, it looks like it's bottomed. Copper corrected, looks like it's bottomed. Aluminum continues to go up. Natural gas has just gone crazy. Mainly, it was going crazy anyway, but now, of course, the Hurricane Ida helped. And still look at those food commodities. We're out of maybe drought season, but then they can drown in any kind of major torrential rain season. And that's kind of where we're looking at. And gold, by the way, just finally, I'll add gold to the mix. We just added to our gold position because, again, so undervalued compared to the rest of the market. And inflation, I don't think, has gone off the table yet. In fact, if anything, I think it's been put on the shelf, but is going to rear its ugly head at some point. But we'll worry about it when it impacts Fed policy. So yes, it's true that Zoom was disappointing in terms of the growth because it's slowed down, but it's still a company that's worth $100 billion. And it's still a technology that many, many people use, including us, which is a subscription base for a mere $12 a month. So as the variant is still here, and even if it went away completely, I think there'll always be a way to have meetings now. We used to do a conference call where you couldn't see people. Now we do it Zoom. So just from a practical standpoint, if we're doing that, then you can guess that this is something that's pretty popular throughout the country and the world. Now, Kathy Wood was attracted to it and on this dip, and she bought an additional $56.5 million worth of shares. So she believed that this was a buying opportunity. Now, this was a huge gap down. Generally, I'm not one to ever support buying a falling knife. However, if it turns out to get some kind of consolidation at these lower levels and can creep back up, then perhaps she's right. But Zoom also now has a lot more competition as far as this sort of telecommunications, because Cisco is doing it and Microsoft is doing it. And that's how it goes with a lot of these companies, is that they become the predominant one, and Zoom was throughout the pandemic. And then people go, hey, this is a good idea. Why don't we develop this as part of our program? And Microsoft, of course, we know, very similar to what happened with a lot of the China companies, sort of gets its hand in anything, in any area that's showing growth. So there you go. Zoom, I wouldn't discount it as out and dead, but I certainly would give it time now to reset. Gensler is, as head of the SEC, also a politician. So from a political standpoint, it's popular to say that we're going to regulate. And he also said that with a currency that is worth over $2 trillion, it would actually create more trust if there was some level of regulation. And that's not such a crazy argument. It's actually a pretty sound argument. But whether or not he can actually regulate crypto, basically it's also a revenue stream motivation, because obviously if they can regulate it the way they do banks, then it will bring in some money. So I think that Gensler is very ambitious in what he thinks he'll be able to accomplish. I mean, today he talked about crypto. The other day he was talking about getting rid of selling order flow, which a lot of companies do, like Robinhood, and that sent the Robinhood stock tumbling and it came right back. So here's what happened with crypto. This is typical. So these people speak, but in order for them to really get rid of DeFi, when the whole idea is non-regulation, it would take a huge undertaking. So crypto opened up, or I should say Bitcoin opened up lower. And as we're talking now, it started to rally. Cardano's been rallying, Solana's been rallying, even XRP, which is still technically illegal, where they're looking into investigating SEC people, what they have in their portfolios as far as XRP or Ripple goes. All of these altcoins are moving up along with crypto, Bitcoin. And if we can get through this 51,000, whatever he says, it's so many years in the making that I wouldn't really worry about it. It's still very bullish as far as I can see in the entire crypto space. And you've got so many different coins now to choose from.